Wow, wow, wow. What an unexpected day. The dropping of the market today morning, it was unexpected. I was completely caught off guard. What just happened, right? This is what happens when an inexperienced trader basically looking into a breakout or a breakdown, just don't know what to do, try to get into FOMO today. That would have worked for sure if you entered in the morning, but in general, that's breaking your rules. Couple of times it works out in your favor, but in the long run, for sure, that's not the case. So today we traded 3 times. One was a loser, 2 of them was a winner. We had another green day in the bag. Basically what happened, I told you guys yesterday, is usually when it's an FOMC minute comes out before this big move are not really expected. I really don't even remember what was the last time when something like this happened. Just out of the gate, heavy sell-off. What we can say is the couple days ago, the huge run-up, now it's coming into 4 circles, and whatever it goes up, it comes down, and the other way around. So what I did is I entered the first trade that was a loser for me. I tried to enter a counter 10 trade, tried to take a long trade from one of my levels, and it didn't work. Again, I cannot emphasize any further how important is the stop loss in your account on your trades, because if I don't have a stop loss, theoretically I can blow up my account. So that's why it's so important. So that's what happened today. Let's go in, let me break down the trades, and let's just take it from there. The market is about to close, another 15 minutes left of the session. So let me break it down. Today I took 3 trades. 2 of them was a winner, 1 of them was a loser. So overall we end up with another green day today. And as the morning started, I was really skeptical what will happen today, because this move, it was just so unexpected. Usually you don't see this kind of moves right before the FOMC minutes. It's tomorrow. Yesterday we traded in a trend range as it was expected, but today this sudden drop from 415 all the way below 408 is just something what in general you don't see every day, especially right before the FOMC minutes come out. It will be tomorrow. We're gonna talk about it in a little bit later. So basically today what happened is, let me show you the entries. What I did today, the first one, it was a counter trend trade. I tried to take a bounce, but unfortunately it just didn't happen. Same as 2 days ago when the market was going up without stopping. Today was the same to the other direction. The only difference, today the sell-off was a very heavy volume. So it was on a heavy value. Let me just see. Okay, here we go. Our first trade today was at 10.17. Let's put the arrows. Let's find 10, 17, 16, and this is the 17, the green candle with the wick on top. So my idea, once we had this big of a drop, it can consider as a parabolic drop. And usually when you see the last candle as a big candle, much bigger than the surrounding candles, to me it seems, and usually it happens as an exhaustion candle. So basically the last attempt to push the market lower. This is what happened on the 1 minute where I entered, and on the second entry I'm gonna show you also on the 5 minutes. So this was the reasons for my entries. So the first one, drop, is not much we can do about it. It had a big drop and an exit, tight stop loss, breakdown, the low. Basically we lost about $100 on it, so it was nothing major. But this is why it's important always to have a stop loss or an idea where the structure is gonna break and where we need to take our losses. You know, we have to give up at some point. Hopefully you guys, when something like this happen, is a good way to see how quickly your account can decimate it. So if you enter for a long over here and you keep holding it and try to average down on every pop green candles, by the time you get down here you have no account left, right? So just don't do it. Take the loss. Anytime you can re-enter, right? Even if you try to find the bottom, which is never recommended until we have a break of a structure or an idea where we want to enter, just don't do it. Get out of it. Wait for the turn, or the best, trade with the trend, right? You go with the trend. My initial thinking was, you know, this is just too much. Let's just get into it. But I had to stop. I executed, and that's it. Move on. The second stop, let me go on the 5 minutes to show it to you guys. This was also a long entry. Today, I just felt, you know, we cannot drop this much, and, you know, put the plan in place. Try to find the entries and just take the entries with good execution. So my second entry, this is already the 5 minutes. So what I explained to you guys on the first one, a big exhaustion candle. This candle right here, breaking again my levels, and was a huge 5 minute candle. So basically what I did, as was breaking down the level, I entered. Also, let me just go back for a few days. This particular level over here, it was our breakout level. And let me give a little more time. So this was on the uptrending day. That was basically our initial breakout level. And also, let me just go back. This, so we can go all the way. So, and as we go back, our breakout level, And at this day, it was our breakdown level. You see, as we drop huge. So this level has, to me, an importance in the structure. So I tried to do the same thing. As it was the exhaustion candle, I entered, and at this case I get a very, very good feel. I got filled. Let me go back into the 1 minute. And let's see the time. It was 11:03. So basically, as it came back up, I entered when the first green candle made a new high. So we entered right here. This is on the 5 minutes, is inside the wick. So I entered here. I was waiting for the uptrend to start, right? Unfortunately, it didn't happen. It came down, I hold it. It didn't reach my stop loss. So I hold it. And also what happened, I added to it once. Because as we see, as long as our structure don't break, we can enter into the trade. And this is the difference between averaging down and scaling in. The averaging down, both of the cases you adding to the loser, right? Because you negative, that's why you're adding to it. But to averaging down, to me, when you enter into a position when you're losing and your structure is already broken and you just try to recover the price, and basically you're breaking the rules, you're breaking your plan, and you just try to get the money back, right? And to scaling in, to me, yes, you're in a losing position, but your structure is not broken yet. And when you enter, that's give you a lower entry price, and in that case, your position is average down, basically. So as it start to move up, your average is becoming between the two, right? So let's say I entered my second position, let's say here, right? Actually, let me show you exactly where I did it. Three and 19. Actually, my second entry was right here. Same level as the other one. I was waiting for the uptrend, right? So basically what happened is the wick, it did break my structure, but I wasn't able to get out of it. I had a limit, and as it wicked down, didn't feel me. Luckily, it was 1 cent, or even the price was on the same cent, but I think maybe it's just no order went through on that level, so it didn't feel me. It didn't kick me out of my trade. Basically, that was a luck. If it's this week, it was so sudden. Probably it's just a flash order went through. Maybe it's even just one order with the low number. I'm not sure exactly what happened, but my order didn't get filled, luckily, in this case. So as it moved higher, I didn't sell. It was a painful movements so slow, the contracts wasn't moving. So basically, as went up, I didn't sell, came down, didn't break the structure again. I left the same stop loss on the same price. And as it started to move, I added to my position, because at this point, as we dropped, suddenly we created a higher low. So I was convinced is start to go up, and it did. But as we see this move from the bottom, let's say from our breakout of the previous level to the 110, it's 1 point, and that 1 point, it took almost 2 hours to make. So on the contract premium, basically this is a killer. It didn't move so slow. So what I end up doing, as my average came, I exited literally not even 10% above my entry. It was a winner. It was a it's okay winner. 10% is always good. But if this move, and I know is no what ifs on the market, just for entertainment purposes, right? So if that move, let's say, happened exactly the same structure as this happened, right? It get up here in a few candles, possibly it's 100% move or more. But in this case, because it was so slow, so painful, basically it didn't add any value to it. And I exited 37, and my last exit was at 52. So as we went higher, I exited 37, 37. I did 2 exit at 37. Actually 37 is the breakdown candle. So as it wicked down below, as it broke the candle, came back, I exited over there 2 times, and I had also more exit. I didn't close completely. I just exited some of my positions. I exited at 52. I exited 52, which is basically the same, and I exited as it was coming down at 101. Yeah, as broke over here. So this was my last 2 exits. So as you guys can see, from here, from 408.60 to do the exit at almost 410, over a point away, and my price barely moved 10%. Painful. All right, so the next one, it was a nice trade. So as we can see over here, we started to form as we broke down. It's a little stretch, but is a cup and a handle, right? A cup and handle formation. That is a valid formation on the market. So my third trade, I was waiting all this. The market just closed. As I came down, as it broke VWAP, I entered. It held it 2 times. Third time came up, we broke the structure, and we started to curl up in the handle. It was a little drawdown, but we continue go up, and I exited on the very top. I entered 12.25. Well, actually, not as it broke, as it came up. 25, as it broke created a higher low, right? Created a higher low, and break out from there. This was the drawdown. Yeah, it was my mistake. The drawdown wasn't here. The drawdown was here. It wasn't a big one. Let's just zoom in to see. As it broke, went up, one big candle came down, never broke our structure. Continue, keep holding it, and my exit on 51. And I exited exactly on the very top. So this was a very nice trade. So this is my third trade. As we did, one loser tried to catch a falling knife, right? It didn't happen. We came down. Same idea. Luckily, I didn't get filled as the wick just came down. We are on the 1 minute, so this one is just a sudden drop. Luckily, my contract didn't get filled for the exit. Added to it, very choppy, very slow moving up. Exited 3 times out of my position as we were forming the breakdown. We were forming not a perfect it would be somewhere here. If we come up faster, right, and we drop back, the idea would have been the same. It was a little stretch cup, but that's the idea. So cup and handle as we come up, creating a higher low, breaking out of the higher low, targeting the high of the cup, right? So perfect trade, picture perfect trade, excellent, good return. This return, actually it was a 50% trade, 50% even, very nice trade. So that's it is. Let's see where did we end it for today. Well, we ended on the same level. So tomorrow, FOMC meeting, the minutes come out, the data comes out at 2 o'clock, so we can expect 2 moves at 2 o'clock, and 2:30 Powell's gonna speak on the conference, and we have to wait for that too. So usually it's 2 moves, 2 o'clock and 2:30. So just be very careful. Usually those moves very sudden. The volatility is very high. You can make a lot of money quick, but you can lose exactly just as fast. All right. So make sure you learn, you study, and don't be a wannabe. Try to be greater every single day.